Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from TikToker. Let's jump right into the gold market here. Trading last at 1767, 68, slightly lower by about about a dollar approximately. Silver is at 26.14 and a half, up about 6 cents. Copper at 450, 451, up another 2 cents. GBTC is trading at about 46. We have a little bit of a delay on GBTC, but for those traders that followed our recommendation to buy GBTC this week, please take profits here. We accomplished the target, the mean of 46, 46.04, and this is where you book your profits here. So take profits on GBTC at the market. We have a kind of a mixed picture this morning, with silver leading the way, copper leading the way, Bitcoin leading the way, Coinbase leading the way, and we have a little bit of a consolidation taking place in the gold market here. Just watch the market here for the first few minutes and get a taste or a feeling for the momentum of the market here. You want to take some profits here on GBTC. We completed the target of the mean. Actually, the sell to target is being completed here, so it's a good time to be taking some profits on Bitcoin. We got up to the daily average of 46.04, and we recommended our clients, our subscribers, our traders here that take this target for now and go neutral. This is what the AI suggests for you to do. And then wait again for another opportunity either for the market to revert back down and test that buy one level or buy two level, or to pretty much go to the extreme above the mean at 47.06 to 47.92. We recommended to buy the market down into these levels here. Pretty much the last few weeks, we've captured this move, this nice move up here. And so we're comfortable with the trade, lock in profits here and go neutral. Things are getting very quiet here. So the gold market is reverting from the average price that you see here of 1772. And the weekly buy one level is at 1761. So the market has been, as you can see, trading in a choppy area around the average price daily here. So we don't want to push the trade. What we want to do is let the market define the energy, the momentum, whether it's a bullish momentum or a bearish momentum. In this case, the price has identified a bearish price momentum, and the target is 1760.61. Unless it reverts back up to 1772 and negates this bearish price trend momentum. Right below 61, we have 1754. Which is the monthly support level, and the buy one daily level, which is the target that let me check something here for a second, please. Testing 1 2, testing 1 2. Coming back here to the market, what we want to do is we are looking for these levels below to be tested and revert back from there. We're looking for a reversion to the mean from that 1761 area, or the price is very, very strong enough with buyers underneath that could take the market back up through 72, and above 72, it activates a bullish price momentum, negating this previous bearishness. In the meantime, what I would like to do is share with you the latest report that we published in the Associated Press this morning, entitled "Gold more money is going to be chasing fewer goods, which will lead to inflation. Summary. Different sectors of the economy, such as home sales, are rising fast. Interest rates are rising. Interest rates are rising, and hard assets, for the most part, are increasing in value. Chairman Powell highlighted that the economy is growing faster than anticipated, and rising interest rates is one sign of that rapid growth. Governments cannot allow interest rates to rise on the long end of the market, given the mountain of debt, which is close to $30 trillion. If you're looking for portfolio ideas like this one, members of Mean Reversion Trading get exclusive access to our model portfolio by seeking out and reaching out to Seeking Alpha. Fundamentals. The 10-year note is rising again, reaching 168. This may be one of the reasons why the price of metals is coming down. Chairman Powell highlighted that the economy is growing faster than anticipated, and rising interest rates is one sign of that rapid growth. If interest rates rise in the short term, gold and silver will probably be bearish. Under normal market conditions, that is what normally happens. However, we are not in a normal situation. We are in a unique position. Different sectors of the economy, such as home sales, are rising fast. Interest rates are rising, and hard assets, for the most part, are increasing in value. In relation, the US dollar is declining in value as we print more and more money. Since the US went off the gold standard in 1971, we have been exporting inflation to the rest of the world. Now we have a debt greater than our GDP. Governments cannot allow interest rates to rise on the long end of the market, given the mountain of debt, close to $30 trillion. If the 30-year bond rate increased, debt defaults would spread across the country and the world. However, the 10-year note is beginning to anticipate inflationary pressures. The key is how fast will the velocity of money become in the economy. The faster it is, the faster inflation will rise. Energy prices and food prices are already rising. One way to protect yourself from inflation is hard assets, and gold and silver are hard assets. In the 1970s, we saw inflation rising, hitting double digits. And while interest rates hit more than 14%, gold also rose rapidly in value. The same scenario is likely to happen again. It looks like money is going to come into the economy faster than expected, which will highlight issues with supply chains and cause rising prices and inflation. More money is going to be chasing fewer goods, which will lead to inflation. Gold is showing a weakness due to the expiration of options. This is a classic example of what is called spoofing or scaring the market. It is becoming obvious that whenever options expire, there is a tremendous sell-off in the futures market, which overshadows the fundamentals and the real market conditions. It kills the premium of calls that are expiring. In silver, it's even worse because silver is a thinner market. If you look at the volume of shorts contracts sold yesterday, it is well above the norm. Silver fell 60 or 70 cents. The paper market is flooded, and it causes the market to fall, running through stops. That is why we recommend using a trailing stop once your trade enters a profitable level. Our proprietary variable changing price momentum indicator got out before this drop, since our subscribers were warned last night to get out. For silver, the VCPMI 360-day cycle, we recommended going long now because we expect a reversion to occur. Regardless of what brought the market down, it is hitting what the VCPMI considers an extreme level at around 25.98. The VCPMI by one level is 25.85 with targets of 26.15 and 26.18, which were accomplished this morning. For gold, buy on a close above the VCPMI weekly level of 1761, the VCPMI buy signal of 1765 has already been activated, and the VCPMI saying to buy at 1755. The weekly buy to signal was at 1761. Gold hit an extreme above the mean and is now coming back down, reaching an extreme below the mean, where the odds greatly favor the market reverting back up to the mean. That is what the VCPMI is based on, mean reversion trading. We trade the extremes of the market where the odds greatly favor the market reverting from those extremes to the mean. The weekly target is 1780. The daily targets from 1755 to 1761, which was completed, and then 1768, and the average price of 1775. The monthly support is at 1754. This is a high probability area to go long, whether it is in the futures, options, ETF, stocks, or some combination, depending on your skill and interest as a trader. So the market came down today to a low so far of 1763 and found buyers. And now we are looking at the market reverting back up from this level here, and pretty much it looks like we have some buying interest. So what we want to see is, first of all, we don't have a day trade for today, so you guys can relax for day traders. And this is a great time to observe the process, you might say, of the algorithm. And so we're pretty much in a neutral zone right now. And let's take a look at silver here. The silver has been trading around the mean, choppy back and forth, but this is a harmonic alignment that has identified the average price of the daily at 26.16 and the weekly average at 26.51. So it's a very strong harmonic level that is of the optimal probability factor to identify the next momentum, the directional momentum. And a close above 26.16 is going to activate the bullish price momentum. And automatically the target above of 26.58 is activated. We're taking a look at GBTC as a trading instrument, as a trading asset, a virtual asset. And we took some profits here at 46.04 this morning. And we are back into a neutral position. Coinbase is making a move up here over 301. It's up about 2.25%. And this is the Coinbase app to trade pretty much virtual currencies. So we have a fairly strong move on Coinbase. On Coinbase Global, this is an asset I think that you want to hold onto as a long-term investment. If you can hold on to the volatility, if you can measure the risk according to your profile, this is an asset that you want to keep. It's just the beginning, I believe, of an incredible move in the virtual currency area. We've been focusing more on gold, silver, and trading Bitcoin, as pretty much it has all of the elements that we need to have for the algorithm to be highly successful in identifying the extreme levels above and below the mean. And we have coded Coinbase Global, and we're beginning to get some really great results. So it's a terrific asset, as I said, to hold on to and own it. And the one that is a tradable instrument is GBTC, which we use, which is the Grayscale Bitcoin, investment trust. We trade that very actively. Hold on to your long core position in gold and the metals. There's no day trading signals to be had. Continue just to maintain your position long. And if you're, maxed at your profile in terms of your money management skills in the application of the VCPMI, I would say just hold on to it and wait until the targets are completed. And we're looking for the gold market to trade above 1772 and activate the 1789, 1790 area. As I said, our target is the weekly average price of 1810 that I believe could be accomplished sometime over the next couple of weeks. $17.70 traded. Well, once we go through 1772, we're going to activate the bullish price momentum, and it's going to negate this bearishness that we're looking at. What you'll usually see when the price accomplishes the target, as we're looking at for Bitcoin, GBTC, Grayscale, Bitcoin, Investment Trust, is the market will consolidate. And you'll see an exchange, a great deal of exchange of the supply and demand, buyers and sellers exchanging trades here. Buyers turning over, selling, so to speak, or the sellers, and we are neutral. And whatever signal develops from here is basically a price trend momentum indicator. And if it activates a bearish price momentum, then the level below automatically is the target. And so at 7:30, it actually at 7 a.m. here, it activated a short trigger from 4601. 4604 was the VCPMI daily, and we got up to 4601, and we are activating a short trigger. So this validates what I'm saying to you here in terms of the AI, recommending that you want to take profits here and you want to just stay neutral. Let the market do whatever it's going to do at these levels. It's a 50-50 standard deviation. You want to trade 50-90, 50-95, not 50-50. 50-50 can chop you up pretty good. We're building a base here with an upward bias. If you can see, even the pattern is a descending wedge. And we have consolidated in this range now, for a couple of days. And so we made a low of 1754.60 yesterday on this spoofing, is what I call, scaring everybody to get stopped out of their positions as we were pretty much completing the sell one target. And you see here the target was completed. It was the average weekly and the sell one daily, or in that vicinity, and it reverted into this waterfall sell-off that precipitated, I think, the bearish trend momentum and the completion of this pattern. And we regained almost 75% of it, all within the same day. But it did obviously cause some damage here. Some people got hurt, and the market is trying to find its way again in the momentum that was building previously. So I think what you're looking at here is another pattern that is setting the market up, I believe, to trade through 72. We have an upward bias. We have a green bar. We reverted right back down from this low here today, coinciding with this trend line. Right below it was the weekly 1761 that we were waiting to be activated, but it did not give us a chance, and the market is reverting. So it's indicating bullishness, and therefore a close above 1772 has the targets well in place at 1780. Silver is reverting into a bullish price momentum above the average of 26.16. And so it's activating the upper targets of 26.58 to 26.63. Hold on to your core. This is where the core position gains intrinsic value, equity, because we're holding on, and until we meet the targets, we don't need to be trading it. We don't need to be worrying about it. The daily, excuse me, the daily structure pretty much is suggesting that there is no trades according to the VCPMI. Now, if you're an aggressive trader, when you love to trade, you can trade any of these levels, any of these pivot points. That doesn't mean that it applies the methodology and pretty much the structure, that the VCPMI offers, or the AI, so to speak, recommends for you to follow in order to get these results that are far, far above average. It's a question of following the discipline of the algorithm, the instructions, and pretty much, have the self-discipline not to be over trading. Once you understand the dynamics of this methodology and you begin to see the opportunities, you're going to feel like a kid in a candy store, where the structure, as I said, if you use it like a GPS for your trading, identifies for you where the momentum of the market wants to go. So right here, it's activating a bullish price momentum with a target of 26.58. Your protective level is 26.15. The signal was a buy at 26.17. Right here at 7:15 a.m. Now, we do not use straight stops, and we do not recommend for you to use straight stops. They are going to be taken out constantly. The only time that we recommend to use straight stops is basically when you enter a profitable position that you can begin to monitor. And if you decide that you want to hold on to the target above or below, then you just use a trailing stop. Now, depending upon also the profile that you have in multiples, what we're finding that for most people, trading the full size contract can be challenging, and you got to be well financed to be able to trade those markets on a full size basis. But they have the micro contracts, the mini contracts, and gold. I think you can trade 3 micros to a full size contract. I think each contract is 1/3. In silver, it's about 20%. So you can trade 5 contracts to equal 1 futures. It would give you greater flexibility for you to be able to do multiples, as opposed to doing a full size contract. And unless you're well financed, you can only do 1 or 2 maximum. So, besides identifying what I call the probability factors in the market and the structure, it's also a question of how you manage the risk. Pretty much, as I said, this is like a GPS, so it's a question of how you drive, based upon what kind of car you have or the speed that you want to have, and so on and so forth. So I use that analogy because this is like driving. Trading is like driving. If you have an accident, it could be devastating, deadly. If you follow the directions systematically, it's going to take you there, and avoid as much as possible any deviation, so to speak, any distraction to your destination. I think the one thing I can say, based upon working with traders, self-directed traders, is that number one, this is a contrarian indicator, so more than likely it's going to give you signals that are going to test your previous knowledge, your previous skills. It's a combination of all of them. It's a combination of Fibonacci. It's a combination of Gann. It's a combination of wave counts, vortex mathematics, directional movement, averages, all in one, all in this metrics that is simplistic and very simple to use once you understand the AI, how to apply the energy behind it, how to manage it. What I'm showing you here is the actual instrument that I'm using to generate now what I believe is over 400% return. And I use the signals produced that I share in here actually to execute the house account. And it is really remarkable that since we started trading in February of last year, real time, real life, we're up 407%. And I think that is a truly amazing accomplishment, which simply leads to the credibility that this tool does work. As of 4/23/21, the balance is showing phenomenal results, up 407% in real trading. All of these trades can be verified. Just for the record, with a statement, and it is real trading in a real account. So if I can accomplish this, depending upon your profile, you as well can accomplish the same thing. But I want to make something clear, that I am not selling you how great of a trader that I am or any of that nonsense. But I am sharing with you what I used to make over 400% last year. So my profile is different than yours. My appetite for risk is different than yours. Everything has to be customized according to your profile. That's what makes a big difference in determining the success of how you apply this indicator. Now, it's not 100% right. So what we do at the Equity Management Academy is basically teach the process and the application on a very individual basis, customized for each individual account. Not every broker, not every trader, I should say, is homogeneous. And so, you can't fit everybody all in the same size. If people don't want to day trade, or, why even discuss day trading? So this has to be customized according to your objectives, your goals, whether you're an individual account, whether you're a retail account, whether you're a home office or a pension fund or hedge of funds. It gives you the ability, again, as a GPS, for you to guide your trading with a very high probability of success. 2620, trading above the average daily, weekly, is a harmonic signal with very high probability that the price momentum will revert back to the extreme above the mean, which is that 2658 to 2663. Very clear. Very quiet day. Very quiet day here, which is a good sign that we're consolidating. $17.72 will activate a bullish price momentum in gold. So we're going to sit pretty much comfortable today, letting the market again do what it's going to do one way or another, and see if it's going to give us the opportunity for us to lock in the targets and objectives that we're looking for. I want to make an announcement here for everybody that is interested in following me here. I am and will be a guest speaker at the Money, Metals, and Mining Virtual Expo, streaming live on actually May 11th. At 3:40 p.m. Eastern Pacific time. I'm sorry, Eastern time. This is on May 11th at 3:40 p.m. Eastern time. Once again, I will be a guest speaker at the Money Show, the Interactive Money Show Virtual Expo on May 11 through 13 on the Money Show. And I will be exhibiting how to use the VCPMI as a GPS for your trading. That's May 11th at 3:40 p.m. We have a great set of panels here and speakers that I think you will find tremendously helpful. And one of the things that I want to point out to you here is that I will be the only speaker that will be talking about the VCPMI as a GPS for your trading. So please write it down. May 11th through the 13th, the Money Show, the Money Virtual Show, the Money Show Virtual Expo, May 11th through the 13th, 2021 at 3:40 p.m. $71.50 traded, slowly inching its way up. Once again, above 1772, it's going to kick in the bullish price momentum here for the rest of the day. Silver is trading above, holding the bullish price trend momentum. So the signals are intact for the gold and for the silver market that they are trading above the average price. And what you want to do is basically just rest for day trading. There are no day trading signals here, but we do have a bullish price momentum being activated in gold and silver from the daily and the weekly averages. Unless the market closes below them, below these levels, we're going to continue to hold on to the long side. Again, with targets in silver at 26.58 to 26.63. And in gold, you're looking at 1780 as the major targets that we're looking for the rest of the day. And then we're going to see what the energy looks like up there, what the volume is, what the supply and demand is, and it will give us a better direction in terms of where the market wants to go next. Just to review here what we did today here, we've taken profits on GBTC at 4,600 for those that followed our recommendation here from the low 38, 39. So we've taken profits here at 4,600 and gone neutral. Continue to hold your Coinbase position and continue to hold your core base metal position as we come into next week. The probabilities are increasing that over the next 2 weeks, we could accomplish the target of 1810 on the gold market. In the meantime, my friends, I want to thank you again for the opportunity to share this information with you, and I hope that it is sincerely making a difference in your trading. Have a great weekend. Be safe, and I'll talk to you next time. Take care.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.